We took a bit of a break on our earnings coverage this week, but after a brief reprieve the last few days, we're back on the earnings train and looking to get caught up. The next name on our to-do list has broken from industry standards a bit, with their fiscal year ending on March 31st rather than December 31st. This, of course, means that we're covering full year earnings this go-round, rather than Q1 results. Let's dive in. Don't miss the Rule Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Our focus today is Silvercorp Metals, who last Thursday reported their Q4 financial results for fiscal 2025. The quarter saw the company post top-line revenue of $75 million, which was a 76% improvement on a year-over-year basis from the $43 million revenue figure recorded in Q4 of fiscal 2024. That revenue figure follows the company selling approximately 3,500 ounces of gold, 1.6 million ounces of silver, 16 million pounds of lead, and 4.5 million pounds of zinc during the quarter, with Silvercorp opting to not provide a silver equivalent figure across all metals sold. Average selling prices for gold averaged $25.33 an ounce during the quarter, a 33% improvement year over year, while silver prices averaged $27.78 an ounce, a 34% improvement year over year. Avid retail investors at this point are likely questioning those average per ounce prices, given this is for the period ended March 31st, when precious metals prices were quite a bit higher. We certainly did, which is why we reached out to Silvercorp on the matter. While we received an extremely detailed response from company president Lon Shaver, it can basically be summarized as this. Rather than doré bars, the company produces and ships concentrates, which comes with a bit of a discount because of treatment charges. Mine operating earnings in the fourth quarter, meanwhile, improved 101% year over year, going from $13 million to $26 million. Net income, however, was down year over year, dropping from $5.5 million or 3 cents per share to a loss of $7.6 million or 3 cents per share. On an adjusted basis, net income rose from $3.8 million or 2 cents per share to $14.7 million or 7 cents per share. Despite the net loss, Q4 net cash generated from operating activities rose from $10.2 million to $30.7 million, a 200% improvement year over year. For the full fiscal year, revenue improved 39% from $215 million to $299 million, with Silvercorp in fiscal 2025 selling just under 7,600 ounces of gold, 6.9 million ounces of silver, 62 million pounds of lead, and 24 million pounds of zinc. Mine operating earnings improved from $81 million to $124 million, 53% increase on a year-over-year basis. Net income improved even more substantially, rising from $36 million or 21 cents per share in fiscal 2024 to $58 million or 29 cents per share in fiscal 2025, a 60% improvement year over year. On an adjusted basis, net earnings improved from $36 million or 22 cents per share to $75 million or 37 cents per share. Net cash generated from operating activities, meanwhile, grew from $92 million to $139 million. Silvercorp ended the year with cash and cash equivalents of $369 million, partially bolstered by a $150 million issuance of senior convertible notes during the year, as compared to $185 million at the end of fiscal 2024. Working capital sits at $310 million. Silvercorp in fiscal 2025 also paid out $5.9 million in dividends during the year. All right, so let's move on to the production data. Silvercorp in the fourth quarter produced 3,100 ounces of gold and 1.6 million ounces of silver, for a combined 1.9 million ounces of silver equivalent, a 45% increase from the 1.3 million silver equivalent ounces produced in Q4 of 2024. Lead production, meanwhile, improved 30% to 12 million ounces, while zinc production declined by 3% to 4.4 million pounds. In terms of costing, cash costs on a net of byproduct basis came in at $2.49 per ounce of silver, a 104% increase year over year, with that rise as per Silvercorp being a result of certain expenses going into a different cost bucket for Q4. And while cash costs may have increased, all-in sustaining costs, net of byproducts, came in at $14.31 per ounce of silver, which was down marginally from $14.36 in the year-ago period. For the full fiscal year, Silvercorp reported production of 7,500 ounces of gold and 6.9 million ounces of silver, for a combined 7.6 million silver equivalent ounces, as compared to 6.8 million silver equivalent ounces in fiscal 2024. Lead production declined by 2% year over year to 62 million pounds, while zinc production came in flat at 23 million pounds. Guidance had called for 7.9 to 9,000 ounces of gold, 6.75 to 7.23 million ounces of silver, 64.2 to 69.3 million pounds of lead, and 27.1 to 30.1 million pounds of zinc to be produced in 2025, meaning guidance was only achieved on silver production for fiscal 2025. The shortfall appears to be a result of head grades coming up short, however, with guidance calling from 1.15 to 1.26 million tons of ore to be processed, with actual production processing at 1.31 million tons. Cash costs for 2025 came in at negative 54 cents, a decline from negative 38 cents on a byproduct basis for silver ounces, while all-in sustaining costs increased by 7%, going from 11.38 to 12.12 per silver ounce. Guidance for costing was provided on a per-ton basis, with cash costs on a consolidated basis expected to come in between $77 and $80 a ton, while AISC was expected to come in between $144 and $152 a ton. In reality, cash costs came in at $81 a ton, which was higher than the top-end range, while AISC came in at $142 a ton, which was lower than the bottom end of that range, so it was a bit of a mixed result here. Finally, there's the guidance for fiscal 2026. Silvercorp this fiscal year is calling for a total of 1.3 to 1.4 million tons of ore to be processed across its Ying mining and GC mines. That level of processing is expected to result in the production of 9 to 10,000 ounces of gold, 7.4 to 7.6 million ounces of silver, 65 to 67 million pounds of lead, and 29 to 30 million pounds of zinc. In short, production is expected to improve this year across all lines of metal production. Costing, however, is still anticipated to rise year over year, with cash costs expected to average between $81 and $82 a ton, and AISC expected to be between $155 and $158 a ton. Capital expenditures, meanwhile, are expected to total $87 million across Ying, GC, and Quanping, while other expenses include $32 million for mine preparation, tunneling, and $2 million for drilling. And then there is the Ecuador operations, with Silvercorp's recently acquired El Domo project. Direct costs in fiscal 2026 are expected to total $68 million, which after contingencies and taxes rises to $102 million. The bulk of the expense here is site preparation activities at $29 million, followed by $14 million in initial costs for process plant construction and $7 million in open pit mining and stripping. A further $138 million is expected to be spent next year in fiscal 2027 prior to the operation coming online. All right, so let's wrap it up. Silvercorp finished fiscal 2025 on a strong note. Revenue was up substantially on a year-over-year basis, which is partially a result of operations remaining running during the Chinese New Year, while cash net generation was even stronger, leading to a war chest slowly being assembled in terms of Silvercorp's cash position. On top of that, El Domo, which is expected to be online by the end of next year, will effectively diversify the company out of a single jurisdiction while costing Silvercorp less than $100 million to get online once the Wheaton funding is brought into the mix. Hard to complain about that. Guys, as always, we reached out to Silvercorp prior to doing this video, and we were really impressed with the president of the company, Lon, taking the time to answer our questions. And we don't always get that from every company. Some companies, they don't really want to get into it with us, but Lon was kind enough to answer our questions. And we do that for you guys because we know you guys want that additional color, which is something we fully intend to do whenever we do these videos moving forward. We want to keep getting better at this and provide you guys with better value. So if there's things you think that we're missing in these videos, let us know. At the end of the day, we're doing this because we want to grow this channel and we want you guys to be happy with the work we're doing. I think that we have a tremendous bull market ahead of us in precious metals. If you made it to this part of the video, you are at the right place at the right time and you're doing the right homework. And I think that you're going to make a lot of money because that's why we're here. That's why I get out of bed in the morning and why I continue to work in this industry. All right, everybody, thanks for taking the time to watch this video. If there's more stories you want us to cover, let us know in the comments section. Also, if you enjoyed this video, do me a favor, smash that like button, subscribe, ring that notification bell. All right, everybody, thanks for watching.